Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin, and we're going to be looking at the trend line that we've been trying to break for a long time. Now, we've argued too that this trend line is obviously an imaginary trend line. We could break it at any moment, but there is a significant amount of the market, participants of the market watching this trend line and waiting to put capital in until once it breaks. So that's what we're going to talk about in this video, and we're going to actually dive into the math probably a little bit more than you're expecting. So if you guys like the content, please go ahead and subscribe to the channel, give the video a thumbs up, and also check out my Telegram channel and the premium list, which you can find a link to in the description below. So let's go ahead and jump in. So we printed a new weekly candle. You can see here it is, the June 15th weekly candle, and we've just started a new one corresponding to June 22nd. So far, it's business as usual. We are still above the 50-week moving average. People pulling hairs out every single day, wondering what the price of Bitcoin is going to do. But for the most part, you can see that it hasn't really done a whole lot the last 2 weeks. And we've even said it's a good thing. The longer that we can spend in this price range, it really is building the case that we're consolidating at a key level at around $10,000, at which point we can launch off from. Now, we always reserve the chance that we come back down to the 200-week moving average. We know that's a possibility, and we're ready for it. But what we're going to do in this video is we're going to show you mathematically, and basically we're going to investigate if there's any type of mathematical trend between testing this trend line. So first thing we're going to do, so you guys can follow along, you can do this yourself, so you can, if you want to pull up TradingView, you can follow along. So draw a trend line down like this. Okay, and basically it's just showing our first test of this line, our second test, our third test, and our fourth test. Now what we're going to do is we're going to take a measured move from the top, and this is I understand this is a bit hand wavy, but I'm just going to choose essentially the middle of this test, because really we tested it 1, 2, 3 times during this macro level test. So let's take it somewhere in this region, maybe corresponding to, say, the second test that happened. So we'll take it here. Okay, whoops, so we'll take it right here. So the second test, we're going to take it from this point. So we're looking at the number of days between each test of the trend line. The second test goes from here to approximately maybe this region right here. And then the next one is from this point right here all the way over to, somewhere in this area. Okay, so what do we notice? Well, we can see that the time between the first test and the second test was 581 days. This is a long period of time. The time between the second test and the third test was 210 days. The time between the third test and the fourth test was 98 days. So is there a trend here? Well, let's look. First, let's plot out the days since each test. So we have 1, 2, and 3. We have 3 data points. So we have one up here, one right here, and one right here. If we fit this to a power function, this is what it looks like. You can see it has a nice fit. I should warn you that if you're going to fit stuff, you really, you don't want to use like polynomials or something that are really poorly behaved when you extrapolate them, but something that is more asymptotic, so it's maintaining the same behavior even outside of the interpolated region, or I should say the fitted region. So this is the curve that you get. Now, if you want to investigate this curve for yourself, all it is y equals a times x to the power b, and here are the fitted coefficients. So you can chart this out yourself. So these are the times between the first 3 tests, because we've had 4 tests, but there's only 3 times between each test. There's n-1. So where would this put testing it a 4th time? Well, you can see that we would test it a 4th and potentially a 5th time if we were to continue this test. Now, some of you are probably rolling your eyes over this. I mean, I get this is a little bit far-fetched to assume that it might follow this trend, but it's just noting that between these 3 data points, we fit it fairly nicely to a power function. So it remains obviously somewhat speculative to identify when our next test of this trend line may be, but if it followed this trend, then the next test, you can see the first 3 days would be 581 days, 210 days, 98 days. The next one would take place in 69 days, and then the one after that, 49 days from each test. And remember, please check out my Telegram channel here, which you can find a link to in the description below. And if you guys like this content, if you enjoy the public channel and want more content, we have a lot more content. I spend a lot more time on the premium list, so check that out at intothecryptoverse.com. Would love to have you guys join. You can see what it looks like here. You get access to a weekly report, a weekly premium video, as well as a Google Sheets dashboard with live risk metrics. And as I've mentioned in a previous video, we're going to be looking at the efficient frontier this year and identifying weighted portfolios that give you the best return given an expected value for each unit of risk, which is measured by volatility. So if you guys want access to the premium content, we have a weekly report every single week, and like for instance this week we really dove into Bitcoin dominance. So I'll see you guys there. You can pay with fiat if you want. If you want to get a discount, you can pay with cryptocurrency. Just scroll down. You can pay with crypto. You can pay for 6 or 12 months, and you'll get a discount for doing so. So let's go ahead and go back to our primary chart here. So we know that if we continue this power function trend, then the time between this test, which I mean obviously is somewhat approximate, and the next one will be approximately 69 days, which could correspond to a month from now. So this would be July 20th, could be, say, another clear test of the trend line. Because right now we're certainly below the trend line. Now, the next test could occur in 70 days, 69 days from our last test. And again, this is a little bit, there is an error bar associated with this because it depends on exactly where I say the test occurs. And then we noted that the next test would occur 49 days after that if we still haven't broken the trend line. This would look like something like this, okay? So this would take us out to September 20th, okay? Now, let's look at our macro trend again. If we, and again, I don't usually draw trend lines. You guys see the videos that I do. I don't pull up TradingView very often. But let's show this trend line that is also a popular trend line that people enjoy drawing. And then let's draw it out like this. And then it's kind of hard to see the price in here, but let's remember that the final one would take us out to around September 20th. Okay, so let's go ahead and remove it. So let's go ahead and remove these. The other one would take us out until next month, so a month from now. So we're just going to go ahead and remove these so we can see what's going on. So if we fit this trend line basically to the bottom of this data here, and I definitely was not the first person to draw these trend lines. I'm just observing that a decent amount of a market tends to respect these to some degree. So we're just going to draw that trend line there. Where would it cross? So it would cross, so that the earliest it might start crossing would be in late October. And remember, 2 more tests of it would get us until sometime in late September. So it's possible, it's certainly possible that we come down, we test it again in a month, and then again we test it again in say July or so. In September. Now, the reason why you might be wondering, well, how could we be testing it next month? Well, the reason is because I'm taking the peak to have occurred, or the test to have occurred way back over here, and we've been around this level for quite a long period of time. So again, coming back up to test this point would occur at around $9,700 in late July, $9,800 in late July. Now, again, I get it. It's somewhat preposterous that I'm extrapolating like this. But I think it's kind of fun to do, to see if there's any, if there is a mathematical trend between each, the number of days between each test of this trend line, and it did seem to fit a power function fairly well, and then we could extrapolate to identify when the next clear test of this trend line may be, this one being 69 days from the last test, and then the one after that 49 days. So we'll certainly see what happens. Again, Bitcoin reserves the right to break this trend line anytime that it wants. It also reserves the right to come back down to the 200-week moving average and hang around there for another 6 months. Okay, we know this. We accept it. This is just a fun thought exercise in a sense. So As far as the rest of the market that we look at, or the other indicators primarily on the channel, we're still clearly above the 20-week moving average. We anticipated in a prior video, we anticipated a slight move down, because when you take a date range and go back 20 weeks, you can see that we're starting to not include these points up here. So we expected this move down. And then if you go to the 50-week moving average and go back 50 weeks, you can see it's probably going to start really decreasing soon, because we're going to continue to not include these higher candles as we continue marching forward, and we're replacing a higher value with a lower value. So I would anticipate the 20-week moving average to not decrease for too long, because again, it's at some point in the next few weeks or so, it's going to start ignoring all of these drops and subsequent candle week after week, so it'll be higher and higher. So I'd anticipate eventually over the next month or two to see a cross of the 20-week and the 50-week, which I think will be, I mean, it's not anything huge, but I think it'll be somewhat bullish to see the 20-week be above the 50-week. And remember, during the last market cycle, I mean, this isn't the BLX, so it doesn't go back too far, but the 20-week, when we held the 20-week as support the very first time during the market cycle, the 20-week was already well above the 50-week. Okay, it was the 50-week was at around $300, and the 20-week is around $350. So in fact, if you were to just say take a measured move between where this was, you can see it was around a 20%, 21% difference or so between where the 50-week was and the 20-week. So I would anticipate seeing the 20-week and the 50-week cross. Obviously, they're fairly close together at this point. So in the coming months, I would anticipate seeing them cross, and we're going to want to hold the line at the 20-week moving average. It's something we know that needs to happen at some point. We may test it tomorrow. We may test it next week. We may not test it for 6 months from now. And by the time we test it, the 20-week could be at $11,000 for all we know. But at some point, we need to test it and we need to hold it. If we don't hold it and you see us fall through, then I would anticipate a drop down to the 100-week moving average or even the 200-week moving average. And if that happens, then it's important to keep capital on the sidelines to take advantage of such a move. As you can see, we hit the 200-week down here, here, and here. Because we talk about lengthening cycle theory on the channel a lot, you guys know that it's more likely than not that the next peak is not occurring in late 2021 or even early 2022, but more likely going to occur at the earliest Q4 of 2022, more likely summer of 2023, and then even less likely maybe the second quarter of 2024. So I hope you guys enjoyed the content. If you did, remember to check out my premium list at intothecryptoverse.com if you want access to exclusive content with tons of regression analysis, statistical analysis, risk metrics, and etc. And at the very least, please subscribe to the channel, and I will see you guys next time. Bye.